Happy Tuesday and welcome to MyStockScanner Live. We look at the early moves, the fresh trends, and the stocks showing early strength. And we always do it with the same three questions. Is it a quality stock? Does it have an upside? And is the timing right? These two gents to my left here are, of course, Liam Flavelle and Hans-Henrik Nielsen. They're the guys with the answers. I'm the guy with the questions. And the first question goes to you, Hans-Henrik, because if I look at a 3-point playbook portfolio, it sits at minus 0.4. We had a buy yesterday, or rather a rebuy. What's up with that? Can't we keep our stocks in the fold and just keep them until they go up? Or what's the story here?
That would be nice, but we never know when they go up or if they go up again. So if they break our stop loss, we sell. If they start a new trend, we'll go in. It's as simple as that.
Liam Flavelle, it's the festival, it's the Glastonbury Festival basically for nerds in San Diego at the moment. And NVIDIA have their big conference over there, but Elon Musk kind of stole their thunder yesterday. What was that about?
He did a bit. I mean, there's probably more leather jackets at GTC and NVIDIA rather than anything else. Yeah, Elon Musk came up with something called the Terafab, which sounds like a child's toy or something like that, but it's actually a massive amount of money he's going to spend in the next year to 3 years, which could be interesting.
Okay, we'll talk more about that because it's Tuesday, and that's also why Liam is here, because it's Tuesday Tech. We look forward to that. But we will start with the big macro question. What is the real price of oil? Because if you look at the markets, one thing is the US market, $95. In the UK market, it's $100. There's a global shortage going on, and we see prices in the market out there in Asia, especially around $150. We're going to break that down. And in Tech Tuesday, all eyes are, of course, on NVIDIA's big GTC event with a massive demand expectations, while Tesla prepares to launch their own AI chip project. Back in Denmark, JENSEN had a major move yesterday. It was up by 37% at one point, ended the day at 21%. What really happened with those 16% that kind of dwindled? And we rounded off with top oil stocks to watch. We're going to look to Asia for new stocks. And we also have an American one that's kind of interesting for you. And tonight's live Q&A webinar is at 7 p.m. Liam, that's going to be you and me. And we, are, of course, are open for questions. Just send them at FOMO@MyStockScanner.com. But let's get started. $1.27 billion. That's number of the day. And then the big question of the day, what is the real price of oil right now? Hans-Henrik, why is there a doubt? Because I know that we normally could look to the UK market and we get a price from there, and then we look to the US market and we get another price from there. There's a little deviation there. But why is that question about what the real price is now?
Well, that depends on what you ask, because if you ask about the real price, meaning the price that people actually pay for oil out in the market, then it can be a bit confusing. The price we normally see, you can see the US oil, that is one called WTI here. The other one is the Brent, the UK version. They are hovering around $100 plus minus. The problem is that is what is called paper oil or futures. So that is not real oil shifting hands here. This is traded on an exchange. If you go out in the real world, as the teenagers say in IRL, I think, in real life, then Dubai crude oil, which is where stuff actually happens. That is where they trade real oil, where it's put on a tanker and sailed somewhere. The oil is at about $130 instead of $100. And on top of that, normally there is a premium of $1-2 for insurance and logistics and stuff. That has now gone up between $50 and $57 per barrel, meaning that the actual oil out in the real world is sold for $180. And if you then want to put some shipping fuel on the tanker so it can actually transport the oil somewhere, you're paying more than $200 a barrel for that as well. So that is confusing, and we can see that it has gone up from the normal oil price back in the beginning of February at 65, and then we are now at 129.9 plus the premium.
Hans-Henrik, there's one thing I know for sure. If something gets more expensive in the production part of the world, then it will be handed out to us at one point. Are we looking at just inflation amok now? Is that what we're looking at?
Not amok, but there is a percentage of a goods price that is normally accounted for as a transportation, and if it's a very lightweight like an iPhone, where it's a high price and it doesn't weigh as much, then it's not as high a percentage that is added in extra cost, but somewhere between 0.5% and 3% in added price on the product. So yes, there will be an inflation cost for this.
Liam, I'm gonna take you down memory lane because here we have dollars flying around in this little video. Had we gone back like 100 years, it would have been pound sterling flying around because that was the major currency back in the day.
All right, don't wind it up. Yeah. Okay.
I'm trying not to. But Liam, tell me, why is the dollar going up against all currencies right now?
Basically, it's a flight to safety, and we always see this in times of stress. The US dollar is the reserve currency of the world, so it's one that things like oil, copper, all the commodities are traded in, and that's what we're seeing now. So the dollar has gone up. What have you got there? It's a dollar index. So
yeah, DXY.
Yeah, it's. I mean, I was looking earlier on. It's up about 5% on the euro and about 5% on the sterling as well. So it's strengthened a fair amount. It's not huge, I would guess. If you look at it, it's hardly the biggest increase in the chart out there. But what happens is gold then weakened. So we're seeing the gold price drop, and we came out of a couple of gold stocks this week just because of that, because they were sort of bleeding some of our profits away. We still made some good profits on one of them. Other things, oil and commodities, you tend to find the producers actually win out of this and are stronger, and the importers are a lot weaker. So with oil, Europe and the Asian countries are in trouble, and US is a good energy provider that's going to be potentially a winner out there. However, you get something called demand destruction if this goes on too long, and the higher the price is, then the more problems that people are going to have actually paying for this stuff in the future. So that's in a nutshell why the US dollar's up.
And also, it's as simple as that there's just more demands for dollars. It's mainly not also the safe haven is one thing, but also that we are using more dollars, really.
Yes, yeah, we are. There are a lot of people who try not to these days after sort of some of the antics out there.
But just with the oil, when that goes up from 65 to 180, you need more dollars just to pay for the same. And then, if I may add, the interest rate in the US have gone up, which automatically drag a bit more dollars in there, simply because you can get a higher interest rate. So
I think it used to be very simple, where something happened, everyone fled to the dollar, US treasuries went in a particular direction. It's actually more nuanced nowadays because of these fears about global recession coming up because of these high costs, and the dollar strengthening is probably not the best thing that Trump wanted either.
And talking about what Trump wants really right now is for everybody to help him. And he maybe even asked the Chinese to help him. But Hans-Henrik, in that sense, that he did a phone call for Xi and said, can we postpone our meetings? And it sounds like it's just two friends meeting up for, I don't know, a beer or something like that. But it's not as simple as that when you have meetings on that level. So postponing for a month or two?
What he basically said was, I would like to wait with the meeting till I know the Chinese position on helping me opening the Strait of Hormuz. And I'm not really sure what world he lives in, but China is one of the only countries that is currently getting oil and gas out of the Strait of Hormuz. So I don't really see, and China is also basically an ally with Iran. They are both a part of the BRICS. Iran has agreed to pay for everything in Chinese yuan. I don't really see Chinese. They have been very diplomatic, but basically said no. I could understand if Japan went for it because they're really reliant on it, but there's just radio silence. They have not said a thing.
They're not picking up the phone. It's as simple as that. They look at the phone. They probably have numbers showing and kind of go, yeah, we're not answering that one. But something we're going to answer the call on is Tuesday Tech. That's Liam Flavelle's subject line here. And Liam, with your background in fintech, there's no doubt that we will ask all the questions to you in regards to this. NVIDIA GTC 2026, CEO Jensen donned on a new leather jacket and went on stage and said $1 trillion. That's a big number.
It is a big number, and I automatically started thinking, is that actually a big enough number, though? That's the thing, because what they've effectively said is they've already waved the number of 500 billion around this year. And it's what that number represents is the important thing here, because I sort of looked at it and said, well, if they're only producing another $500 billion next year, does that mean their revenues have stalled? And that's not the case. What he's actually talking about is the backlog of work that it will be ordered from customers, and you can see here that they actually think they're going to commit to finishing 367 billion, just a mere 367 billion this year, up until next February, and then the following year just under the $500 million mark. So that's where that sort of number comes back in. He announced quite a lot of good stuff. I mean, I seem to be talking about Nvidia and TSM just constantly on the Tech Tuesday, but that's because so many things are happening and because they're such important companies. The big move at the moment is inference. So that is actually answering the questions rather than training the models out there. And it allows, and Nvidia are moving heavily into that area to actually make it more efficient and cost effective for their clients, i.e. OpenAI, Amazon, people like that, to actually answer questions. And it puts some fair, it cuts some of that competition out effectively. So the AMDs of this world, the Google Tensor chips and things like that, they're all going to struggle to compete with Google because they're such a big heavyweight in this area.
Before I'm going to ask you about the new competitor on AI chips area, Elon Musk, because, well, we know what he says is it's never going to happen. No, let me talk about TSM instead, because right now they are in a squeeze, but it's not because of what they're producing, but what they need to produce from. That means that they're running out of oil. They might even run out of raw materials because of the war in the Middle East.
Yeah, they have a huge dependence. I mean, TSM are a really, really high quality company. You can just see from our playbook sort of dashboard here, you can see everything is green. I call it the most important company in the world because it makes everything for us. So everything is green. The quality side of things, yes, big tick in the box. The company is a quality company. And from a valuation perspective, we're looking at some quite meaty numbers coming out potentially. The best case scenario is 67%. The worst case scenario, if it drops down to April levels last year, 6% and 26%. That's what the analysts think. The problem here is this drop recently, and that is because chip making is highly energy intensive and uses a lot of chemicals. So they've got massive stores of helium, which is used to do everything from checking for leaks in various different areas to thermal control and things like that. So they use a huge amount of it. Also, sulfur is another one, and they use a lot of sulfuric acid for cleaning and for etching onto the wafers. The problem is a lot of that is actually sourced from the Straits of Hormuz. They're oil-based offsets that come out of the oil process, and people are worried that in 3 to 4 months they're going to start running out of this stuff. And we think it's going to take 14 weeks at the minimum to get new supplies getting out there if everything starts going sort of not pear-shaped, the opposite of pear-shaped, apple-shaped in the next few days.
We're definitely going to keep our eyes out on it. Of course, it will be right at center all the time, especially with the oil kind of ending and with the prices going up, which is going to be, as we talked about, passed on to the consumers. But there's help around the corner in the production of chips, because this guy kind of just came out of nowhere and said, I'm going to start building next week and we can deliver at the end of the year. Liam Flavelle, I'm going to ask for your take on it, not Hans-Henrik.
Is he muted?
I don't know if he's muted. I'm going to keep an eye out for his facial expression, how red he's going to go.
They announced Terafab, which is a massive expansion of making chips for Tesla, effectively, and their various subsidiaries that they've got out there. It's actually a really sensible plan. So it's not abnormal. Elon Musk is a highly intelligent guy. They're basically saying they don't want the dependencies on companies like TSM or anyone else. They want to be able to build all of this stuff themselves in the future. The problem comes in that they're actually spending about $25 to $30 billion this year, and their rollout for the next 3 to 4 years is estimated at $300 billion. In the history of 20 years of Tesla, they have made free cash flow of 21 billion total. That's it. So they're actually looking in the next 4 years at spending 15 times the amount of cash they've generated for investors out there. And you can just see on the playbook sort of very quickly here, we've got, is it a quality company? There is some green out there. It's a high quality score, great. The earnings after a few dire years are starting, the analysts think, go up again. The PEG ratio is high. The returns on investment are the key worry here, that they're just not efficiently producing profits for us. But the valuations is the thing that we always go on about. If investors carry on paying a PE of 225 for the company, then you could see a 60% increase. But this isn't a small, highly volatile chip company. This is an established company that makes cars that are losing market share. They're making robotics that the Chinese are literally whipping everyone's ass globally on. What is there in the growth on there? So we see potentially a 60% drop and maybe break even at the right time, at the right place. And that's without this risk coming in of terafab or teraflop, as it was suggested to me. The title that it just sounds like another Muskism saying we're going to do this. They also, just as a final sort of dig, he says they're going to be up and running in 8.5 months. And the quickest fab so far to be completed is 3.5 years in Arizona.
And let's just leave it at that, because I think that we need to air out Hans-Henrik now, because he's really been controlling himself. I'm gonna give him some meat to talk about in regards to GN Store Nord, because Hans-Henrik, yesterday we looked at the Danish market in disbelief, and we saw GN Store Nord up at 37% at one point, and then when the day was over and the dust settled, it was 21%. They're down a little bit today, 2% today. What's going on?
I have no idea. However, I think what's going on is that investors in the market started to ask themselves the same thing that you and I did yesterday in the show. Jesper said, I wonder what is it we invest in now? Because when GN sold off their hearing aid division, it was 75% of their employees. It was basically all of their profit. They can pay out their debt now and sit on 2.5 billion in cash. That is fine, and they own a percentage of that Italian company then. But what is it? We cannot analyze it now because it's not the same company. It'll be a year or two before we in 3-Point Playbook can do anything with it. And I think the analysts started scratching their head a bit and said, what is a company now? And then I think they took some profit and sold out.
And talking about the company that bought the Amplify fund, the Italian company, their stock stumbled like 14.3% yesterday.
Yeah, Amplifon is actually a decent company. It's not a completely shipwreck at all. They have a decent quality and earnings per share going up and revenue and so on. They have free cash flow, which is a good thing. They have been sold up in the 100 and 120 PE before, and now they're down at 14. So we have not really any way of saying what is a fair valuation here. So what we do, and when we see here's a good quality, let's say we found out there was some good value in it, some good potential, then we simply look at the market and say, what are the clever guys in the market thinking about this? And we could have earned some money in this uptrend, definitely. But from around here in the 38, 40 up here, 4 years ago, we would have been out and we would never have touched it since. So that is kind of the strength in our in our strategy here. That is that we never try to outsmart or being smarter than the market. We simply just, when we have a good candidate, we wait till the big guys start buying. And as you can see, that can take a while.
We're going to talk oil again because, as I said, it is the one big thing that everybody's talking about. One thing is question about the prices. And next thing is what to invest in. And Liam, we had a question at FOMO@MyStockScanner.com that we're going to take into the show here because somebody found a couple of Chinese stocks, Chinese oil companies, and said they're even available on the American exchange. Couldn't that be something? Because they are not sort of within the Middle East. So why not?
They are. The two that were found were PetroChina and Sinuk. I don't know how that is actually pronounced in Chinese, but just to go through them very quickly. I mean, they're a bit of a mess. I mean, the analysts, there's no peg ratio because the stock has dropped this year from last year, or the growth prospects are dropping. But it's a high quality, and earnings are looking to go up next year as well. So that might be good, might be bad. But the rest of it, there's a fair amount of red on there. The one thing it does do quite well is create some free cash for us. On the valuations point of view is where this one falls down, because there's not an awful lot of upside because it's gone up so much. It's been going up since March last year, basically, pretty much almost in a straight line, and the last few weeks have just sort of confirmed that. So it's in a strong uptrend, but just too expensive and not as much upside for us. From Sinuk, it's a very similar story. The earnings were dipping because oil prices had gone down from last year. Analysts are like them a little bit more. The PetroChina is a bit more of the state-backed operator. Sinuk is actually, I think, the cheapest per barrel producer of oil out of China. So everything's a little bit more green, a little bit more faster growing potentially. From a valuations point of view, you can see it's still quite high, and the downside is quite massive, because if it went down to March levels last year, then you've got problems.
See, now the thing is that we get back to where we have to ask the smartest people that we know, and those are the people that are watching the shows, because they're smart enough to watch the show, so they know a lot. So why not ask them about possible oil stocks? And we're going to do that in the Tuesday poll later today. But Hans-Henrik, you're going to outsmart them a little bit here, because you have a bit on one that is sort of, yeah, exactly. So that's under the radar right now. But on your radar, you found something that has the ticker code SUN.
Yeah,
But it's not solar
but
energy.
it seems to have gone under Saxo's radar as well, because we have it in MyStockScanner, we have it in TradingView, we have it in Yahoo and Google Finance. Somehow, Saxo doesn't have it. So for those of you out there sitting and scratching your head and say, why can't I find it? I have absolutely no idea.
I think it's an LP. I think it's a partnership. So there's often a lot of brokers don't like that with
all right.
How they
could be. Anyway, it is what is called a downstream company. They used to have a refinery, but they sold that off. So now they are in logistics. They're servicing 10, 15,000 stations, just gas stations. Reasonable quality, earnings per share set to go up, really low PEC, revenue going up. Analysts have upped their look at it. Return on capital employed have gone a bit down, but that's because they're building out the structure, the logistics a lot. Free cash flow is good. So basically, there's not much negative to say here. I have put the P's at 10, 13, and 16 in our value chart here. Could be set lower, but again, 10 is actually quite low for this sort of business. And there we have a bear case at 21%. Not saying that that'll make 21, but we have a good potential compared to what risk there is. Analysts are not particularly thrilled about it. And looking at the chart here, you can always ask, has it gone up too much? But it is in a double green on the MTI here. The trend is really good. So I think there's some potential in here. However, for now, at least until I find it with Saxo, I can't trade it. But maybe someone out there can.
Oh, let's see. Maybe they'll add it to their ticker line later after they've seen the show here. That could be a possibility. But we're definitely going to ask you in regards to our Tuesday poll, where you can vote on the stocks that we bring up. We're going to bring up some oil stocks, but you can also add your own. And let's see what the poll says. It will be posted later. And since we're talking questions, see, now we're asking you a question. Tonight at 7 o'clock, you can ask Liam all the questions you like, as long as it's in regards to stocks. You're welcome to write us at FOMO@MyStockScanner.com. That's FOMO@MyStockScanner.com. And we look forward to having your questions. We'll take as many as we can during the 1 hour that we're going to broadcast from 7 o'clock tonight. Earlier this broadcast, I said $1.27 billion, and it's sort of a little tease game that we have in regards to what is that about. I will do a countdown, because now we're in my old hood. In that sense, we're talking music here. $550 million. That what was Bruce Springsteen's music catalog was sold for. And this is not just record industries buying up the rights for these music and the catalogs, it's also hedge funds that, as a matter of fact, go out and buy these catalogs because they can make a lot of money from it. Michael Jackson's song catalog is number 2 on the list. Springsteen was number 3, 1.2 billion for Michael Jackson. But number 1, and isn't that fitting when we have 3 old guys sitting talking, then a group that we basically remember from the beginning of our lives? Queen sold their music catalog back in 24 for $1.27 billion. Liam, your favorite Queen song, what would that be?
So many. Don't Stop Me Now. We Are the Champions. Things like that. So yeah.
Hans-Henrik, yours?
Bohemian Rhapsody.
Oh, there we go.
Well, maybe we'll come from you. Yeah. It works. Yeah,
it works. I can tell you there's a top 10 of songs that have been sold: Genesis, Phil Collins, Justin Timberlake, Britney Spears, and a lot of others. See, that was the show for today. Remember, tonight the Q&A with Liam Flavelle, and I will ask the questions. Write us at FOMO@MyStockScanner.com. And tomorrow, Hans-Henrik, I know that you're out, so Liam will be holding the guards in regards to the Fed meeting. So he will be commenting live tomorrow night, because it's going to be 2 o'clock in the afternoon US time for the release of what's going to happen with the Fed rates. 2:30 is the press briefing from Jeremy Powell. Liam Flavelle, do we agree? No rate hikes, no rate lowering, right?
I can't see anything moving out of it. I'm just trying to work out how much coffee I need to stay awake during the press conference, to be honest. But yeah.
Okay. With a little luck, he will end his term on a really kicking Trump's ass, sending something back, but he probably won't.
Well, at least he's no longer being indicted and being dragged to court. It could be the other way around at the end of the day. Maybe he'll drag Trump to court. Who knows? Anyhow, Liam, I know one thing that you're looking forward to as well is also numbers from Micron. We have those Wednesday, I think it is. Any expectations?
Who knows? I mean, I'm really looking more to see what the constraints are going forward, what their issues are with capacity. Because if they can start producing more, then they can start earning more, but that will also lower the average price of memory in the near future. So it's that balancing act that I'm looking for.
Liam Flavelle is back with us on Thursday in regards to our daily show at 1 o'clock in the afternoon, of course, because we have Thursday Tech at that time. But tonight, 7 o'clock, FOMO@MyStockScanner.com with your questions for the Q&A show with Liam Flavelle in English. Look forward to that. And that's today's playbook review here in our normal show, My Stock Scanner Live. Keep scanning smart, stay ahead of the curve, and we will see you next time tomorrow in Danish at 12, tonight at 7 with the Q&A. Have a good one, guys.